investment insight series, Magellan Minutes. This series is designed to provide you with relevant and digestible talking points on global markets, each in around 10 minutes. My name is Jennifer Herbert, Key Account Manager at Magellan, and today I'll be talking to Magellan's co-head of franchises, Hannah Dickinson, about some of our current franchise exposures. Thanks for joining us, Hannah.
Thanks, Jen. It's great to be here.
Hannah, the pandemic has impacted our lives in so many ways this year. Can you talk us through some of the changes in consumer behaviour that you've noticed and how these changes compare to prior downturns?
That's right. It's been a really disruptive year, but also a fascinating year from a consumer behaviour perspective. I would say the changes that we've seen fall into two main buckets, changes in the way people are shopping and then changes in the types of products that people are buying. So in terms of the way people shop, in March and April, virtually the whole world shut down and there were restrictions across the board, market by market, but also city by city. There were some consistent themes that we saw across the franchises space. Firstly, a shift from physical stores to e-commerce platforms, then the consolidation of shopping missions into less frequent, bigger basket trips, and also the shift from dine-in to takeaway. Starbucks actually said that over 90% of its sales volumes in the US in the second quarter flowed through the combination of drive-through and mobile order and pay. Then in terms of what people are buying, in the early days, I guess it wasn't surprising to see everyone running for necessities. But then as we moved out of panic mode and people realized that they had enough toilet paper and hand sanitizer, they shifted quickly into nesting mode. So we saw strong demand for products like prestige beauty, mainly skincare actually, home improvement, sportswear, and then spirits for making cocktails at home. So lots of nesting type things, I suppose. And it was interesting actually that we didn't see any down trading, which we've seen in past recessions, particularly the GFC. And I think what that reflects is the fact that there were a lot of professionals in higher income earning jobs who actually were able to work from home through the pandemic. So their incomes weren't affected. And they weren't spending on things they normally would have spent on, like holidays overseas or social events. So they felt richer. And they also felt like they deserved some sort of indulgence. And I guess as the franchises team at Magellan, we are really focused on the sustainability of these trends and trying to ensure that the portfolio is well positioned for the next few years. So I'll give you the example of home improvement, which saw double-digit growth during this year. So there were some structural factors that drove that. There were things like mortgage rates being at historically low levels, rising home prices, and migration trends away from major urban settings to more rural and suburban areas. But then at the same time, we also had government stimulus packages that were helping people, and there was lowest discretionary spending on other categories. And at the end of the day, consumers have finite levels of cash in their pockets. So for home improvement to remain elevated, we would have to assume that there's a permanent hit to regular travel and leisure activities, and we just don't think that's going to be the case. So when we balance the structural factors and the transient factors, we expect to see a modest decline in home improvement in 2021. And that's consistent with what we're hearing from companies like Lowe's. They had an investor day recently, and they said that they think the home improvement sector will decline by between 5 and 7% next year.
And what has all this meant for Starbucks, Estée Lauder and Louis Vuitton? How have they adapted to the new consumer environment?
Well, I think there's a few things that those stocks have in common as we think about the recovery profile. So firstly, they're all positioned at the premium end of the pricing spectrum. So the fact that we didn't see any down trading really was very positive for those companies. For Estée, for example, prestige skincare is their largest category and it's also their highest margin category. So it was great for them that skincare was so popular. And the other thing they have in common is their exposure to China. It was, of course, the first country to grapple with the virus, and it faced a short, sharp lockdown in February, and they've been on the path to recovery ever since. So that helped them bounce back quite quickly, and it also gave them a playbook to follow as the virus spread to the rest of the world. And that playbook has actually been quite an impressive one. And I would say they've been really agile for such large companies. One thing that's really come to the forefront has been digitalisation. So companies are saying that this has pulled forward about 3 years worth of e-commerce development. And we think a good portion of that is sustainable. The one company called Shopify actually said that convenience is habit forming. So those new shopping behaviors might stick around. To give you an example from Estée Lauder, e-commerce is a really fast growing, high margin category for them with really attractive economics. And it represented about 15% of sales before the pandemic. And it jumped to over 20% of sales this year. They're finding new ways to engage and connect with consumers digitally through things like live streaming and virtual try-on. They said that they had over 13 million virtual try-ons this year compared with only a few million last year. And we really like the e-commerce channel because it gives them opportunities for data capture and more targeted marketing and innovation. And this part of the investment thesis has really been reinforced through COVID. Starbucks has also been focusing on digitalization, for example, developing their app, their mobile order and pay technology, and their loyalty program. And that's seen really positive early results. They said that they had a 35% increase in 90-day active members in China this quarter compared with the same quarter last year.
How do you think these companies are feeling as we approach 2021? If the vaccine's successful and rolled out relatively quickly, what does the future hold, and what are some of the key risks on the horizon?
I think companies are still pretty cautious because there is a lot of uncertainty in the near term. I mean, we're seeing the resurgence of the virus in places like Europe and the US, and those countries are re-entering lockdown. So there is a lot of uncertainty. But I would say that companies seem to be more prepared this time around because they've been through it before, and so their supply chains and their route to market is a bit more equipped to deal with this. In terms of the vaccine, we have seen a pretty dramatic sector rotation away from consumer staples towards cyclicals and virus-exposed stocks like the brewers, the restaurants and hotels. And if we assume that it's rolled out relatively quickly, I would say one of the main things we'll be thinking about next year will be the macro environment. And there's a distribution of curve of possible outcomes on that front. So on the one hand, you've got government stimulus payments rolling off, expiring at some point, and potentially we'll see the impact of bankruptcies and job losses start to flow through and impact consumer spending and confidence, which could be a negative. But then on the other hand, we could see some exuberance and pent-up demand for things like social events and dining out and travel. And that would actually be positive for our premium-focused holdings. And under that scenario, I suppose, then we have to think about what happens to inflation and interest rates and asset prices if the economy suddenly overheats. On your question on key risks, one that we're thinking about is working from home. So it's relevant to several companies in our space, but one obvious one is Starbucks because they have quite an exposure to urban stores. When we were thinking about what could happen there, we decided to commission a survey of over 5,000 US consumers to understand whether people expected to continue working from home and how this might affect their coffee purchases going forward. And the results were interesting, I suppose, maybe not particularly surprising. We found that people had reduced their Starbucks consumption because they were just leaving the home less and they were making coffee at home. It wasn't so much that they were worried about their income or switching to local coffee shops in their area. So that was good. And it also supported our hypothesis that people really enjoy the flexibility of working from home, but they do also like the interaction that they get with colleagues in the office a few days a week. Starbucks has kind of given some indication as to what they think will happen, and they said that they expect a 25% permanent decline in daytime foot traffic in urban areas like Manhattan, which equates to about 1 to 2 days working from home per week, if you can think about it like that. But that's, it's not the end of the world for Starbucks. We think that a lot of that foot traffic will be recaptured in suburban areas, particularly with the help of their app and their loyalty program. And if you remember, an important piece of the Starbucks value proposition is this concept of a third place. And so that's really referring to a place outside of the home and the office that people can gather and build a sense of community. And the pandemic hasn't just driven an economic recession, it's actually driven a social recession. So we think that people are going to seek comfort in human connections and in the little rituals of daily life. And that might mean going for a mid-morning break at a local Starbucks or sitting at the store for a client meeting rather than grabbing coffee on the way into work. And we think that those sort of in-person experiences are going to be really important to facilitate social healing as consumers around the world recover from the virus and the trauma of 2020.
Hannah, thank you so much for sharing your insights with us today.
You're welcome.
And thank you for watching. If you have any questions, please do not hesitate to contact one of the Magellan team, and feel free to share this update with clients or colleagues as you see fit. Take care and stay well.